Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Far right area on the chart, the BPX has become, and to a certain degree others as well, has become more overextended or further away from this simple moving average than any time in the last 8 or 9 years on the daily chart. The British pound is ridiculously out of whack, is what I'm trying to say. If we look at a chart on livevol.com, that's the yen, here's the BPX. And I don't know if I could change this moving average.
I don't think you can change those moving averages, unfortunately.
No problem. And it's not a problem. This is the 50, which is approximately the same thing as looking at the 62 for all intents and purposes. You go to livevol.com, you simply type in BPX, and it brings it up. This quote right here, where it's trading right now on the side here, we are undergoing a situation right now that the British pound is trading further away from its statistical average than at any time in the last 7 or 8 years. Let me repeat that again. The British pound is trading at a ridiculously overextended statistical average, significantly. And that's important to me for a reason that we're going to get into in just one moment. I'm going to stop sharing, exit desktop sharing. And let's see if are there any questions about what I just said. We started with the foundation for using a 62 or a 50 simple moving average. We talked about the fact that I can use that as a home base. We talked about the fact that when the currency, the option in particular, the BPX gets too far away from that average, that there's a recognizable situation and a possible move back to the mean or move back to the average or a reversal of a trend that could take a long time, weeks or even months, to correct. Are there any questions that come in or anybody that's wondering about what I just said? Because when we get to a chart in a moment, we're sort of going to discuss exactly what I'm thinking about where we're at right now. And I want to make sure we're all on the same page here.
Rob, I have a question, Steve. I know it's extremely oversold. What about timing? Is there a way to time it a little bit? So what do you look for the pound to improve a bit? Do you just jump in right now? What kind of what are your steps when you see something that I know you did this last year with the U.S. dollar and you were right?
Yep. That's exactly what we're going to get into next, and that's the reason that I asked a question like this. If the foundation makes sense, then what I want to do now is I actually want to move to a chart, actually, and I want to start looking at and talking about things that I start to actually focus on to build an entry and to sort of start the process of managing and building a trade in one direction. So you're sort of anticipating exactly what I want to talk about next.
Jump ahead.
Okay. Well, we're going to move on because there wasn't. I mean, it seems like everybody's sort of on the same page about this. And once again, I'm thrilled that you're all here, and this is a good time to talk about this. I'm going to use the BPX chart, and I'm also Paul Kurtz. That's fantastic. It doesn't matter. Paul asked if it's important to use an exponential moving average or a simple moving average in Excel, and the answer is. In fact, you could. It really actually doesn't make any difference to me. As long as we've got a measurement for that moving average and we've got statistical information associated with that BPX's ability to get a certain distance away from that moving average, it really actually doesn't matter which moving average we look at, and it doesn't actually matter if it's an EMA or SMA. What's going to matter is the statistical significance of the area we're in and the money management technique that we use to actually build a position in a responsible fashion. All right. So what I want to do next is I want to move to a chart. So I'm going to share again, And I'm actually going to talk about what I'm thinking and what I'm doing right now to start building a position. And once again, no amount of webinars or advice from a professional can ever replace your own analysis and your own money management. And there's never any reason or responsible. It's never responsible to sort of leverage your whole account on the advice of somebody that you talk to. So don't take anything I have to say the wrong way. All right, I'm going to start sharing some stuff.
Hey, Rob, one question from Michael, and I think that I did a little bit of, well, I guess at the end of 2008, I looked at the different pairs and saw that the pound was down about roughly 35%. So I thought it was obviously underperforming everything else. His question is, how out of whack is that relative to everything else? So, what do you look at that in relative terms? Do you look at it, one oscillator versus the next? How do you look at all, comparing the pairs?
Well, that's really good. The pound. Okay, last year, let me put it in perspective. Last year, the dollar's weakness was more excessive statistically against the euro, the EUI, than it was against the yen, the YUK, the YUK.
Right.
And you could measure that simply in terms of its ability to move a statistically significant distance away from its average. In this instance, right now, the BPX sort of takes the cake and wins the champion of the world for being out of whack. So how out of whack is this in relation to everything else? This is wiggity whack. Like, this is way more whack. And the reason for that is right now, there's a fundamental reason behind it, is that the UK has sort of taken over the mantle of worst economy on earth in the minds of reporters, commentators, and whatnot. That there's this honeymoon that the dollar's been through, obviously. But the British economy has really started to take the brunt of a lot of the bad news, and there's worries about banking in the UK. So, Michael, I hope I'm answering your question, but statistically speaking, it looks like the British pound is statistically further away from its average or some type of statistical mean that we have than maybe the yen is, or even some equities are, and so forth. All right, so now we're going to look at a chart here, and for those of you who follow price action and whatever else, I think you'll probably enjoy what we're about to talk about. All right, I'm going to share again. I'm going to share this time. I'm going to share I'm going to share my desktop again, and we're going to look at a chart, and we're also going to look at a chart of the BPX, and then we're also going to look at a spot chart, and I'm going to show you two different things. I'm going to talk about a methodology by which you might use options by themselves, and a strategy whereas you might use options to give yourself more time to stay in a spot trade that would otherwise maybe become the worst nightmare ever known. Okay, I'm going to share my entire desktop, so if some ridiculously private email pops up, I'm sure you'll all give me a break. That was a joke. Okay, here we go. This is, you should be able to see, once again, the ISE FX British Pound. That's the BPX. And you can see the 50 moving average is the blue line running through the middle of the screen. And we really popped up way up there. I want to look at the spot market now. So now I'm going to switch over to a British pound US dollar chart. And this is a daily chart. And this spot chart will help us sort of understand the process by which I start to build a position, not only using spot Forex, but taking advantage of sort of the, let's see, make sure my font size is right. Yeah, taking advantage of what we can do with options to help us spot. You'll notice at the far right, we're trading at about $1.39 or $39.46 right now. That's pretty insane. I mean, this thing has lost an enormous amount of value. You can see that the spot chart is inverse to the options chart. What is going upwards on the options chart is going downwards on the spot chart.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.